And welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2025, and we're diving into Viasat's second quarter fiscal year 2026 financial results. Viasat, a global leader in satellite communications, has just released its latest earnings report. Joining us today is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. Viasat is a fascinating company, especially with its recent acquisition of Inmarsat, which has positioned it as a formidable player in the global communications sector. I'm excited to delve into their latest financial performance.
EPS forecast and actual results. Let's start with the earnings per share. Analysts were forecasting an EPS of 25 cents based on a survey of 2 analysts. How did Viasat perform in this regard?
Viasat reported an adjusted EPS of minus 20 cents, which is better than the forecasted minus 25 cents. This indicates that the company managed to control its costs and improve its operational efficiencies more effectively than analysts had anticipated.
That's a positive surprise. What do you think contributed to this better-than-expected performance?
Several factors could be at play here, including synergies from the Inmarsat acquisition, cost-cutting measures, and perhaps a stronger-than-expected demand for their satellite communication services. These elements likely helped Viasat to mitigate some of the financial pressures they were facing.
Revenue and profitability overview. Moving on to revenue and profitability, Viasat reported a revenue of $1.2 billion for the quarter. How does this compare to their previous performance?
The revenue of $1.2 billion is a solid figure, reflecting a stable demand for Viasat's services. Their net income came in at $50 million, which is a positive sign of profitability. Additionally, the gross margin of 15% indicates that they are managing their cost of goods sold effectively, which is crucial for maintaining healthy profit margins.
It seems like Viasat is on a steady path. What are your thoughts on their profitability outlook?
Given their current trajectory and the strategic benefits from the Inmarsat acquisition, Viasat is well-positioned to continue improving its profitability. The integration of technologies and resources should further enhance their operational efficiencies and market reach.
Operational efficiencies and future outlook. Let's talk about operational efficiencies and the future outlook. How is the Inmarsat acquisition impacting Viasat's operations?
The acquisition of Inmarsat has been a game changer for Viasat. They've successfully integrated the teams and technologies, which has led to significant operational synergies. This integration is not only enhancing their service offerings, but also expanding their global footprint.
What can investors expect from Viasat moving forward?
Investors can expect Viasat to leverage these synergies to drive growth and innovation. The company's focus on building a sustainable future in space and providing high-quality, reliable communications will likely continue to yield positive results. Their strategic initiatives are setting a strong foundation for future success.
Key takeaways. As we wrap up, Viasat's second quarter fiscal year 2026 results show a company that's effectively navigating its challenges and capitalizing on strategic opportunities. With a revenue of $1.2 billion and an adjusted EPS of 20s, they have outperformed expectations. John, any final thoughts?
Viasat is demonstrating resilience and strategic foresight. The successful integration of Inmarsat and their focus on operational efficiencies are key drivers of their current and future performance. Investors should keep an eye on how these factors continue to play out.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Viasat's performance in the comments below. Until next time.